Good afternoon, everybody. It's Rob Thompson, associate broker with the agency here in Colorado Springs, and welcome to our inaugural podcast. Title yet to be determined, but what we want to do today was just sit down and have a conversation about the market and about the purchase process. And I'm here with Nanette, Laurie, and Mike, and I'm going to let them do their intros here real quick. So with that, who are you and why are you here?
Hi, I'm Laurie Ristig. I'm a licensed realtor here in Colorado Springs, working with Rob at the agency, and excited for our first podcast. Whee!
My name is Mike Mattice. I'm with Total Lending Concepts, and I've been a lender since 2011, and I'm looking forward to helping everybody understand the buying process.
I'm Nanette Lampman, also an associate broker here at the agency, and just happy to be part of the conversation.
Well, thanks. Welcome. Okay, so we'll get right into it. The topic of the day is the purchase process. Specifically, if I'm a buyer looking to buy a home, what steps do I need to go through? But first, before we attack that, let's talk about the current market. What are the what are the number of active homes on the market currently, Nanette?
1788.
Okay, 1,788 homes. Is that trending up or down, or what's
down.
going on? Okay, trending down. Is that seasonal, or what do we know? Anybody chip in?
Sure. I'd say it was seasonal. During the summer months, people tend to want to move. Their kids are out of school. The weather's nice. They're not going to have to move in the snow. And in the winter, people are just less likely to want to move. It's the holiday season. They're not...
Yeah, and the kids are back in school.
Yeah.
They don't want to put their house on the market, so the inventory's low.
Right. We're late October now, so it doesn't surprise me that those numbers are going down.
What about sales price? What are homes going for right now?
I think we looked at it was about 305 was it the median or the average?
That's the average
right.
for October to date.
Right.
Okay, is that trending up or down?
Oh, that's trending up.
Is it trending up?
Without a doubt.
Okay. Well, that begs the question, should I buy now? If I'm a homeowner looking in this market or rather a home buyer in this market, is it a good time to buy?
Well, that all depends on your situation. Are you buying because you want to live in this home for the long term, and or are you're going to live there for 2 or 3 years and then you're planning on moving? You're going to have a lot of closing costs when you move, and you have to make sure that you're not going to be in the hole and you're going to owe money at the closing table when you sell your home. Is
there a percentage or a dollar figure I should budget for?
Budgeting for 10% is probably good. You're going to need to pay all kinds of closing fees, realtor fees, and the seller usually pays for the buyers and the seller's realtor fees. So, I would say 10%, and then so you're going to need to make sure that your home is worth 10% more than it was when you purchased it.
So what we're saying is, if I'm buying a home and it's $200,000, which is a rare find in this market, but if it's $200,000, I need to plan to sell for $220,000.
$220,000, yep.
If I'm here for a year, is that a realistic expectation?
It might be. Probably not. Depending on your neighborhood, depending on how much the market prices increase over the next year, if at all. There's a lot of factors to throw in there.
Okay. What about interest rates? Do those factor in, Mike?
Absolutely. The interest rates affects your payments and what you're going to be spending on a month-to-month basis.
Okay.
Current rates are between 3.875 to 4.25, depending on your credit.
Okay. And are those projected to go up or down?
I am not going to go on a ledge and say whether they will or won't. I've been crying chicken little for a while now, and it's still pretty stable. So I'm going to say rates will probably stay pretty close to where they are.
Okay. So, all that said, maybe I want to buy a house. What's my first step? Nanette, what's my first step?
I would say your first step would be to talk to the lender, because if you don't know that you qualify, and you don't know how much you qualify for, you might be out there looking at homes you fall in love with, and they're just too expensive. That's pretty disappointing. Mm-hmm. Yeah, it's kind of a waste of time, honestly.
Yep.
So that would be my first step.
Okay, so talk to a lender
first.
Talk
to a lender first.
Okay,
yep.
Why won't you show me homes as an agent if I'm not pre-qualified?
For the same reason, because you don't know that you even qualify.
Okay.
Or what your budget is.
Or what your budget is. So we have not a clue where to start.
You don't want to go looking at $400,000 homes if your budget's $250,000 and
That's kind of a letdown.
So, and I kind of feel like step one is two things that go hand in hand, which is get your lender and get your realtor, because your realtor can, if you don't know where to begin, or sometimes people will just go online and pick the first lender they see, and sometimes your realtor can help you show you 2 or 3 lenders that are local, that they know they've worked with before, that are reliable, that are on top of their game.
We work with lenders all the time.
I mean, if you're a buyer, you can use whatever lender you want.
Not to toot my own horn, but using a big box lender like B of A or Chase or any of those, you're not going to close on time, most likely.
Right, because their volume is so high that sometimes they can't.
Ship's too big to steer.
Exactly.
Yeah.
Can definitely change the process from being fairly pleasant to very stressful with the wrong lender.
Okay, so I talked to a realtor. A realtor might give me some recommendations on lenders. So I call you up, Mike. What do you need from me?
It's interesting that you guys said pre-qualified, and there's 2 distinctions. There's pre-qualified and there's pre-approved. Pre-qualified means that your client, our borrower, went online, filled out a brief application, and then your lender went on and ran the credit and did a cursory review of the information that the borrower provided and says, yes, you're pre-qualified. Where I work, we actually like to get people pre-approved, which is where I actually collect supporting documentation. I submit it to underwriting, and we get a real pre-approval stating that this is what you are approved for from an underwriter, which is far different than me sitting at my desk saying, well, yeah, it looks good. Because during the process, there's a lot of investigation that goes on. As far as your credit history, as far as your rental history, as far as your savings, where the money comes from, all these things take a big part and a big role in whether you qualify or not for a home.
When I've told folks in the past, this pre-qualification is I submitted my data to the lender, and pre-approval is the lender validated my data.
Correct.
Okay, so we get pre-qualified or we get pre-approved based on the lender, their style, and then what's next?
Start looking for homes.
Oh yeah.
Okay.
The fun part.
The fun part.
Yeah, the sizzle.
Okay. So we look for homes, we find the one Nanette. What's the next step?
Then the next step would be your agent will take a look at comps in the area. You don't want to overpay.
Okay.
And you don't want to put in ridiculous offers either, because you found a house that you want. So you comp the houses in the area, kind of the same size, same number of bedrooms, and come up with a fair price. That does come down to the buyer. It's what you want to offer. Your agent isn't here to tell you what you can offer, what you should offer. We can give advice, but then you come up with what you feel you can afford and what you want to offer on the home and submit an offer.
I think a lot of what your guys' job too is to remove the emotion from the process. As a buyer, you fall in love with the house, and you guys are trying to keep them objective.
True. So is this a market where buyers are getting a lot of discount on houses?
No, haven't seen that. No, definitely. Throughout the summer, people were paying over asking price. I have seen that slow down a bit.
Yeah, I've actually started seeing sellers giving a little bit of concessions again. But as in the middle of summer, that was not the case.
And I think it also depends on what price range you're looking at. If you're looking at anything under $250, forget about it. You're probably going to pay list price. But if you're looking at a $500,000 home, maybe you might have some wiggle room because there are less buyers at that price range, at that price point.
Okay. So we find the home we like, we write an offer. Do they accept it, or do they? What's the next step? I put an offer in. What's next?
We wait to find out if it's accepted or not.
Okay. What could they do if they don't accept it?
Sometimes they counter.
Okay.
They may counter with a higher price, and if that works for you, you can accept that, and then you'll be under contract.
Do I have to accept their counter?
You sure don't.
Do they have to counter my offer?
Nope.
No. Okay. So they could counter, or they could reject the offer. So we go under contract. Say we win. We come to mutually agreeable terms. What do I do? What's the next step?
Inspection. Well, you go through the contract. You look at all your deadline dates. So you're going to have a lot of different things that you need to get done by a certain deadline. And if you don't complete it by the deadline, you're not then that gets rid of your out. So let's say you have an inspection deadline date of a week from today. You have 1 week to get the home inspected and to submit any things that you want to get fixed on the home that you're asking the seller to repair. And if you don't get that in by that week, and then something comes up in the inspection, you're like, oh no, I didn't realize that chimney was stuffed, or I don't know, whatever, or or there's a crack in the foundation, but we didn't get our inspection done in time, and now too bad. Where before you had an out. You could have said, I don't like that this is wrong with the house, and I changed my mind. I don't want to go through with this contract.
So that's an inspection objection.
Correct.
And that's important to get done before I order the appraisal, because you don't want to spend the client's money.
Right.
So we go under contract, we schedule an inspection. I heard about this guy named Ernest, and he asks for money.
What does he want? He's very sincere about wanting
earnest money.
Yes.
So what is earnest money?
Earnest money shows that you're literally serious about the contract. It shows your good faith that you plan to complete this transaction.
Mm-hmm.
So that's due usually within 3 days after going under contract. It usually amounts to about 1% of the purchase price and has to be made in good funds, usually submitted to a title company. Some real estate companies do hold that themselves in a separate account. So it's something you have to know that's coming up front.
So our first couple steps are earnest money and inspection. Mike, can I swipe my credit card for earnest money?
No.
No? Why not? If I have the credit line, right?
Well, because you just increased your debt ratio, and that might affect your qualifications for getting the loan.
Can my mom give me the money?
Your mom can gift you the money on certain loans in certain scenarios. Yeah.
So good funds. It means I can't swipe my credit card for it. It means I should probably talk to my lender about the source of funds.
Always talk to your lender about source of funds. That's a big thing for us. When I sit down with people, I usually educate them on the whole process from start to finish.
Okay.
So to wrap up that thought, Rob, is that during the pre-approval process, we verify all funds to make sure that they're available for us to use.
What if I'm a non-trusting of the bank kind of person, and I have $2,000 in mattress money? Can I use that to pay the earnest money?
Well, that goes to coming to me several months prior to wanting to purchase a home and getting that money in the bank 61 days to be specific, before you want to purchase a home.
Okay, so I just, bottom line, I need to check with you on earnest money. Okay.
Yes.
And that that just to clarify too, that is money that the buyer has to tender, right?
Correct.
Okay. So earnest money, inspection. I find stuff in the inspection, Laurie, that I don't like. You mentioned something about I can tell the seller I don't like this. What is that?
Yeah, so your realtor will work up what's called an inspection objection, and you can go through your inspection report. Your inspector will give you usually within about 24 hours, a detailed report with photographs and everything of every little nook and cranny of that house, anything that he found good, bad, ugly, everything. And you can go through and you can request that the seller repair the item or possibly give you a credit for it if it's something that you want to fix yourself. And you can ask for all those things in the inspection objection. And then that goes over to them and their realtor, and then they have a chance to look through it, and they can either say, nope, I don't want to fix any of those things, or they can say, we'll do these 2 things, but not the rest, or they can say, we're not going to fix any of this. What say you? And then it goes right. It's kind of part of the negotiation process. It's not just negotiating price. You're also negotiating the condition of the home, really.
Don't they have to fix what I say?
No, they do not.
So what if they don't? Is my earnest money gone?
Well, not if you if there are specific dates on the contract that says how long you have to come up to a resolution on that, and if you can't resolve it with the buyer or with the seller, and they don't want to fix something that you absolutely think is a deal breaker, then you can get out of it, and they will give you your earnest money back, provided it happens by that date.
So we tendered the earnest money, we had an inspection, we negotiated the terms. Maybe I wanted my furnace fixed, and they agreed to fix it. What happens next?
Appraisal.
The appraisal.
The appraisal?
Yeah.
Okay. Isn't that the inspection? Isn't that the same thing?
No, they're not.
No?
No, one determines value, one determines condition.
Okay, so the appraisal determines value?
Correct.
Okay.
And habitability is another thing, which kind of relates to condition, but it's not the same thing. FHA and VA require that the home is habitable, meaning that the roof is good, the plumbing works, the appliances work. And that's just so that the people can actually move in. Whereas conventional loans don't require that. Those are cash and carry, have a nice day, enjoy the home.
Okay. So the what if it doesn't? What if there's something on the appraisal? Does the seller have to fix that?
If they want to close. Yeah.
Okay. But I, as the buyer, I can't say, no, I'll take the roof as is?
No. Once it's marked on the appraisal, it has to be fixed.
Okay. So what happens if the appraisal is low, Nanette?
If the appraisal is low, and then you have a few choices. You can either back out of the contract if you can't come to an agreeable sale price. In a hot market like Denver was last year, people were actually bringing the overage to closing in cash. So they would actually pay over appraisal price. But in a normal market, I don't think that normally happens. However, like a VA loan, you can't pay over appraised price. The VA protects that.
Right, the lender won't let you pay over the appraised price, or they won't give you a loan over the appraised price.
Correct. You can
You can
If you want to bring extra money to the
extra.
table, if it's like this house is the one and you have an extra few grand sitting in the bank that you want to bring to the table, you can.
More is involved.
Okay. Is that a smart idea?
I mean, if you're gonna stay in that house
Depends
till
on
you're
how
old
much you
and
love the
gray,
house.
and it is the one, then I mean, it might be for you. But if you're gonna move in a couple of years, you would need to keep
negative equity.
You have
from the
negative
get-go.
equity in this house now, so you need to keep that in mind. That's something that can happen.
That kind of goes back to what you're talking about budgeting for the sell.
Correct.
The resell
Right.
when you're buying the house,
Mhm.
right? So if I overpay, I might be putting myself in a condition, putting myself underwater.
Yeah.
And what does underwater mean?
It means that you owe more money on the house than it is worth, and so than it's worth
you
with
think
closing
sell.
costs.
Okay.
So when you go to sell the house and you go to the closing table, rather than saying, "Oh yeah, I sold my house and it was worth this much and I got this much for it," that means I get to leave and I'm gonna have $5,000 in my pocket. Instead, you might have to come to the closing table with thousands of dollars, who knows how many thousands, depending on which way the market went and a number of other factors. So yeah, if you're upside down on your loan, you either have to bring that money to the table at closing, or you have to short sale it, or there's a couple different.
Okay. So I think we
unsavory
hit the three
options.
big things in the process. Earnest money. Once you go under contract, earnest money is due. We talked about the inspection objection, inspection resolution, where we ask for X, Y, and Z. Seller has a chance to respond, if I'm understanding correctly, with I'll do Y, maybe not Z. And then we have an appraisal where they determine value of the property. And then we talked about what happens. What happens? Do I get my earnest money back if the value isn't good and I don't want to buy the house?
If you do
Sure.
it before the appraisal deadline.
By the deadline
Okay.
date, you gotta keep those eyes on those deadlines.
Will you help me keep the eye on deadlines?
Of course, that's my
Okay.
job.
Okay. Okay, so we went through earnest money, we talked about inspection, we talked about appraisal. Mike, can I go shopping at Home Depot before closing and buy a new furniture set?
You can go shopping anywhere you want with your mattress money, but yeah, no, don't apply for new credit. Don't spend money that's in your bank account that you've allotted for the purchase of the home, because sometimes it's your approval is based on assets that you have in the bank that will be there when it closes.
So I can't go buy that new car, even if
I would highly recommend that you
sweet
don't
deal.
do that unless you want to sleep in your car.
Okay. So rule of thumb, maybe talk to the lender before.
Always call me.
Call your lender.
Always call me. It's funny because I stress that in the beginning, and I have people call me and say, "Hey, I'm going to go grocery shopping. I'm going to spend a little bit more than normal." And it's okay. You can do that.
Okay.
Just don't go buy a car.
Don't
Yeah.
buy a car. Don't buy
Furniture.
big ticket items.
Yeah.
I've heard
Open
it
a new
said,
credit card.
or new credit lines.
Mhm.
I've heard it said, don't deviate from your normal pattern.
Correct.
Okay.
Correct.
Okay. Am I missing anything? So we talked about earnest money, we talked about inspection, we talked about appraisal, we talked about not buying new furniture or cars before closing.
It's happened to all of us too.
Yeah, it has. Any other big ticket items I'm missing into the general process of buying a home?
Not that I can think of.
I mean, there are a couple little things here and there, like getting homeowners insurance and, you know.
Sure.
But no big things that are, I mean, that can be big if you live in a floodplain, but other than that, like, there's a couple little things that your realtor can help guide you through that aren't, like, gonna affect whether the thing closes or not, but yeah, I think those are pretty much the big ones.
Okay, I would agree. So we talked a little bit about it, but the future of the market, and here's your chance to, free will and chime in.
Pontificate.
Where's this? Is it? We talked about budgeting, but would you say overall? And you don't have to. This is.
I mean, nobody has a crystal ball. We can't see into the future, but we were talking earlier about how over the last 3 years, the the home values here in Colorado Springs have just like gone through the roof. And why is that? And you always have to look at outside factors. We talked about businesses in Denver. I mean here, but also in Denver. Just like the last couple weeks ago, I was in Denver looking at the skyline. I'm seeing 12 different cranes with new skyscrapers being built in downtown Denver. I mean, a lot of businesses are coming to Denver. We're talking about maybe Amazon will come to Denver in the future. And a lot of Denverites, there aren't enough homes there. So people are moving down here and commuting. It's an hour and a half, depending on where you're at in Denver, commute. The legalization of marijuana here has brought a lot of people moving to Colorado in general. And so home values have gone up for that. So you just have to ask yourself, are people going to keep moving here? What is supply and demand going to look like? And as long as there's not some crazy, market crash, financial crisis, something like that happened in 2008, I mean, is there a reason for the market to tank? And can we sustain prices going up? I mean, if the prices are going up, we have to see people's incomes matching that. So, I mean, some of us think it's just going to kind of taper off. Some of us think it's going to keep going up. Some of us think, oh, well, what goes up must come down. And everyone has a different opinion. And there's so many factors that are going to affect that number. It's hard to really nail it down and be...
I think life is unpredictable.
Sure.
And I think making fear-based decisions is a mistake, whether that means I'm holding back on buying a home because I'm afraid of what's coming.
Right.
Or I'm going to rush out and buy one because I'm afraid what's coming. I think you have to look at where you're at right now.
Right.
You look at your finances, you look at your life. If it's the right time for you, you jump.
Sure. And you can always look at risk factors. I mean, if you can absolutely see something on your horizon where you're like, well, I might not be able to make those mortgage payments after XYZ happens.
Probably a bad time.
Maybe I shouldn't do it now.
Exactly.
But yeah, asking what's going to happen with the market, I mean,
Too many variables.
there's so many variables. You can look at historical data and you can make educated guesses. But yeah, we're all looking at the same data and we're all kind of coming up with different guesses. Yeah.
Anything you add, Mike?
No, I think she covered it pretty well.
Thanks, Laurie.
You're welcome.
Okay, so we'll wrap it up here. But so we talked about the overall purchase process. We talked about some things you can do to maybe mitigate the risk. We talked about planning for the resale now, which I personally think is a really important point.
Absolutely.
My number one personal question that I offer my clients is take a look at the price now and then ask yourself, will it resell for 10% more in the timeline, the horizon that I have projected to be in this home? And if it won't, it still might be a good buy if you're prepared to be a landlord. So
the rental market is nuts
strong.
right now.
Yeah. And then that's another factor. Did you have something, Mike? Yeah.
No,
Just agreeing. And then we also talked about the purchase process. We talked about earnest money, the timeline usually within 3 days of a contract. We talked about the inspection. We talked about appraisal, and we talked about not buying things without talking to your lender. Okay.
Yeah, don't buy the Maserati.
Oh,
Those
don't
are
buy
the
the
biggies.
Maserati. Okay. Yeah. Have to wait till the day after closing, right? Or
When you have keys and
His.
you open the front door, you can go do whatever you want.
Okay.
And honestly, it's so worth it to get a realtor if you're the buyer too, because like we said, traditionally the seller pays the realtor fees. So if you are a buyer and you are looking for a home and you're like, well, I don't know, I'm going to have to pay this realtor too. Probably not.
It's factored into the
Right.
the
Probably
costs.
not. Yeah, it's not a cost for, I mean, there are some for sale by owners who are like, I refuse to pay this, in which case there's the possibility that you know, if that's the house you want, it might happen, but 99% of the time, the seller is paying the realtor fees. So it costs you nothing and you have someone to guide you through the process.
And someone on your side.
Yeah, you have an advocate.
Exactly.
Right.
So if they want to get pre-qualified or pre-approved, how do they get a hold of you, Mike?
www.mikemattisse.com. MikeMattice.com.
Okay. And Nanette, if they want to buy a house, how do they get a hold of you?
You can call me 719-661-9889.
And Laurie, what if
You can call me 719-964-0632. I'm on Facebook. Got a website. Just Google me.
Okay. Well, there you have it. This concludes the first inaugural podcast yet to be named.
TBD.
But TBD. There you go. That could be the name of the podcast.
Actually, that would be a
Let's
great
call it
name
that.
for a podcast.
Yeah.
Okay, I think we just named the
To be
podcast.
determined, yeah.
Okay, well, this concludes the first inaugural broadcast of TBD. Hit us up if you have any questions.
I contributed.
Have a good day.